Hi, this is Rain Steinberg, CEO of Arca. Thanks for joining us on our Fireside chat series around ESG. With me today, I have Brian Walsh and Simon Forster from TP ICAP. Thanks for joining us, guys. Really excited to chatting with you.
Good to be with you, Rain. Really excited about the conversation.
Fantastic.
Likewise, lovely to be part of it, Rain. Looking forward to the conversation and see where we go with it.
Fantastic. Let's start with you, Brian. Just, this is a fireside chat that we've been doing with various participants around markets and how they look at ESG. Can you give us a little window into how you guys view ESG at TP ICAP?
Yeah, well, TP ICAP is the world's largest interdealer broker, and our ambition is to be the broker for the transition to a better world, a low carbon economy, a more socially inclusive world. And so our sustainability strategy is really built on three pillars, all aiming towards getting us towards this better world and this ambition of being the broker for the transition. So the first is our own ESG performance. So we're taking steps to actively manage our own carbon emissions, our own social activities, and our own governance. That way, we're really trying to avoid the harm that comes from our operations. The second pillar of our strategy is to benefit communities and stakeholders. And so we have our ACT program that we call TP ICAP for Good, that is built on our legacy of ICAP Charity Day, which has been around for 29 years, where we donate all the commissions and revenues from the ICAP brand from one day to charity. And we've raised over $200 million US over the years for really incredible organizations all over the world. But our third pillar is sustainable finance. And we think that for companies that are serious about having a positive impact, the first thing they need to do is first make sure they're not actively contributing negatively with our, and that's managing our own ESG performance. But also the second thing they can do is to leverage what they do best as a company and apply those core skills to contribute to solutions to social and environmental challenges. So from us, we are trying to leverage our expertise at being this large interdealer broker. We have operations all over the world. We operate in a number of asset classes. We operate in a number of geographies. And so we're trying to bring to bear our client connectivity, our data, our liquidity, and our market infrastructure to help our clients meet their own sustainability goals and objectives.
That's fascinating. So that first pillar where you're kind of eating your own dog food on ESG and making sure that you're following your own ESG principles, you help others kind of do that themselves. Is that what you would say about that third one?
Yeah, I would say for the third one, for our sustainable finance approach, as an intermediary, we have a different role or a different opportunity than, let's say, an investment bank that is underwriting loans or an asset manager that is making investment decisions. So we can't, as an intermediary, as this broker, we can't unilaterally drive markets, but we can accompany our clients and help provide them the tools and services they need to meet their own sustainability objectives, whether that's aligning their investments with the UN Sustainable Development Goals, or aligning their client demand for them to transition to clean energy, renewable energy, and make the transition to a more low carbon economy. So again, we're there to try to open up new markets and the markets of the future, the more sustainable markets of the future, and help our clients explore those. And that's where I think digital assets comes in, because we want to be the broker for the transition on a number of levels. So it's not just the transition to a low carbon economy or a more socially inclusive economy, but also the transition to a digital assets economy. And that's where the work of Simon comes in, and his team, looking at what are the tools that we can provide our clients as they're trying to navigate the new economy of digital assets.
That's fascinating. Simon, when you think about that as that broker for the transition and that transition, to digital assets and being, one of the leaders in bringing, traditional incumbent financial players to digital assets, how do you see that lining up with ESG initiatives and how they're looking at it?
Yeah, Look, I think one of the things we, as an organisation, have done reasonably well so far is try to get on the front foot with this transitional period. Sort of 2017, 2018 was when the firm really started to think about cryptocurrencies as this new potential asset class and this technology that underpins the asset class and what that might mean for financial market infrastructure moving forward. Now, with that, it's an ongoing educational process internally and certainly with our clients. And then obviously part of that conversation is focused around ESG, something as obvious and prominent as kind of the environmental impact of the consensus mechanism through proof of work, which continues to divide opinion and is certainly a talking point. I think to one of Brian's earlier points, what we try to do is just have a balanced view. These topics are sometimes contentious. And we try to avoid being heavily skewed one direction or the other. I think what we try to do is be a voice of reason and look at things in a measured manner. And when clients come to us, they want to know that we're doing things in the right way from a regulatory standpoint, given our role as kind of this intermediary across financial, commodities and energy markets. So when we think about providing access to products within this new asset class, we have to look at it through a lens of ESG and make sure that we are offering products that we're comfortable with on underlying assets that we feel comfortable supporting. So that is an ongoing process for the organization and something that we're always mindful of, because the ESG component of everything we do as TP ICAP is really quite important. And I think crypto assets gets more attention than pretty much anything else that we do, or it's right up there in terms of the attention it draws and the scrutiny. So we really have to be quite careful and cautious and considered in the approach we take to providing products and services to our client base.
Completely agree. A lot to unpack there. When you think about your clients, and we're specifically talking about ESG and then its impact on digital and that type of transition, where would you say in importance? I know ESG has been a huge trend, for almost a decade now, and a movement towards, social and impact investing. Where do you think that Venn diagram is and the overlap of your clients' interest between ESG and how big that's become, and then their interest in digital assets? Is there a lot of overlap, or is it evolving?
Listen, I think it's constantly evolving. I think we're still in the very early stages of adoption and understanding of this asset class. So when you think about how ESG overlaps with cryptocurrency, let's say, or blockchain as a technology, I think there's still an awful lot of learning for TP ICAP to do and for our customers to do. We do see the Bitcoin consensus mechanism get referenced. That's part of the narrative when our clients think about whether they want to be involved in cryptocurrencies, involved in Bitcoin, involved in Ethereum, where it is today versus where it might be when it transitions to proof of stake. So they certainly overlap, but I think it's a moving target. We are so early in this journey. We've been focused, as I say, since 2017, 2018, and we know firsthand with the scrutiny associated with this asset class, it takes time for things to mobilize. And one thing we are seeing from our clients is, 2 years ago, I'd say the direction of travel across the traditional financial community wasn't abundantly clear. We have a lot more data points now that would suggest it is clear. You've had this kind of institutionalization of the asset class, and now we are seeing our traditional clients move in, and it's really important that we can service them, and just being mindful of ESG as a thread of the conversation around digital assets is a really important one, which is why working very closely with Brian and his team about the messaging and the narrative, yep. Which, as you know, Rain, in this asset class, the narrative is really important, and perception can be reality. So we've got to be very cognizant of the approach we take, make sure we're giving out the right messages in terms of what we're doing and why we're doing it, because this does get extra scrutiny.
Yeah, I think you made a very interesting point there when you talked about, we're talking about the E at the moment in the ESG, the environmental side, a lot of concern about the consensus mechanism and not wanting to take one side or the other in this and provide, good information and things like that. Specifically on that point, when you see more traditional people come in, where are they falling on that? They're very concerned about carbon, obviously. Do you think it's online, more information needed? Where does that conversation generally skew on the consensus mechanism from your incumbents that are looking at digital assets when they come to you?
Yes, it's a good question. I would say the focus from our traditional client base is Bitcoin and Ethereum in terms of the assets within this kind of cryptocurrency sphere. It does come up in conversation, but to date, we haven't had many examples where the carbon footprint of Bitcoin's network and the consensus mechanism has been a sticking point, although it has come up. I would imagine within any major organization, when they think about engaging with this asset class, think about providing services to their clients in this asset class, it has to be part of the conversation. But I think even over the last 2 years, the quality of information that is presented has increased dramatically, and you get a much more balanced rhetoric out of mainstream media. It's still a little biased at times, I would say, but fundamentally there's a lot more information that exists, which I think allows people to make reasonably well-informed decisions. And there is, an angle whereby this is helping to drive us towards a greener future. And there's lots of evidence that would support that in what is still a very short time. So
Yes.
I think what is most important, and I think something that has become clear even in the very short time we've been involved in this space, is the quality of information that is available. It's more balanced now, and I think that gives everybody who is thinking about entering this asset class the opportunity to make an informed decision, and that feels like a healthy place to start from as people do their own, due diligence on any particular asset or this as an asset class.
That's really comforting to hear, and I agree with you. I think that's definitely been one of the things that emerged initially was a very strident, definite views on things where we had very small data sets, not a lot of time, and not a lot of time for like measured thought. And I too have observed a kind of a softening, more data forward approach to things and people engaging and I would say just a less tribal way on one side or the other and being, really wanting to have engaged conversations. I'm glad you're seeing that too. In the other areas, which I think get less airtime in the whole ESG space, what do you see when people think about this asset class, digital assets, that is, on the S and the G part of ESG?
Yeah, I mean, there's a lot of different areas we could focus on, but I think one of the other narratives that has persisted is around cryptocurrency being used for illicit activities. That was certainly one of the things that was constantly referenced and still is referenced to some extent. And I think one of the interesting things and one of the very powerful things about open source blockchains is the transparency. And I think people that spend any time looking into what this technology means, they soon realize that there is a level of transparency associated with this new technology that we haven't previously had. So when we think about the use of crypto for illicit activities and how do we measure that against what is being done elsewhere, we now have the ability to actually quantify what that is. And Chainalysis, who I know you'll be familiar with, Rain, who do
Yep.
fantastic work, they're putting out their trends for 2022 around the illicit use of crypto. And whilst the absolute number is higher than it's ever been, its relative the relative number against the overall use of crypto has never been smaller. And I imagine that trend continues, which is, as this asset class grows, because it is still very small, the percentage of transactions that would be associated with illicit wallets and illicit activity will get smaller and smaller. And I think that's really powerful when we think about what this open source technology can do for the good of society. And that's one clear example where you have the transparency that you wouldn't otherwise have.
Yeah, I'm really pleased to see that. I remember that narrative being so strong, especially around things like Silk Road and drug dealing. But when anybody that gets familiar with this, not that it can't be used for illicit activities, you very quickly realize using something like Bitcoin, for instance, that has an immutable ledger that lasts forever. And while it's pseudo-anonymous, it may not be locked up to you at some point. That means that any illicit transaction is really frozen in amber. And if you ever are associated with that wallet, there is no statute of limitations on a immutable blockchain where a transaction can go away. It's actually quite bad, for that type of use case. Not that you couldn't be, but it's a very poor way to conduct illicit behavior because of the transparency. And that I'm glad to see that narrative is changing. On the governance side, this is one that particularly interests us here at Arca, where we do a lot of investment work and we engage, with live projects, active governance issues in, things like DAOs or decentralized autonomous organizations, where, this is all very new stuff. Of your clientele that are approaching this, especially ESG, where does the G and governance come up on their understanding and radar? Important, just beginning to dawn, afterthought?
Listen, I think, traditional financial institutions are really just taking their first steps in some ways into this space. And that first step is usually, okay, we want to provide access to our clients in Bitcoin related products, or we are thinking about, trading them for a different reason. And that's kind of step one and version one. When we think about all of the other things that we are seeing and have seen over the last 3 or 4 years that has kind of blossomed from crypto, I think that's a little bit further out. But things like, DAOs, which, sprung onto the mainstream radar, I'd probably say last year. Obviously, Constitution DAO is a fantastic example of this completely new paradigm in social coordination and the ability to raise capital in a very short period of time in a structure that hasn't previously existed, $47 million. And I think that's going to be a narrative of 2022. But in terms of kind of governance, I think it's an evolution. When we think about, and I'm going to ask you a question after this, Rain, because you've built companies and Arca is the latest one. But if we think about in the US, right, LLCs as a structure only came to fruition in the 1970s, and that was out of Wyoming, and I'm sure there was an evolution there. And obviously it's quite interesting, and I'm sure no coincidence that we're seeing a lot of the focus and development and this DAO, all these DAO structures and the support for them coming out of Wyoming and the senator there. And it feels like that is just the next evolution in corporate structure. I think it's going to take some time to find a model that works, because there's lots of things that we're figuring out. But fundamentally, it presents us with an opportunity to create new corporate structures that are community driven. With that presents its own challenges, but I think that is something that over time our clients will more heavily focus on, but I think that's probably slightly further down the line. So interested to hear from your perspective, wisdom tree to Arca, how you think about corporate structure, and whether there was any thoughts there around how you would put the organization together based on what you're focused on and the technology and what it presents.
Absolutely, thanks for asking that. We actually have discussed these type of things both in our active pursuit of better investment outcomes for our portfolio companies who have decentralized governance structures, and we're seeing real time what works. I can say right now, it is not developed enough for a company like us to have that type of decentralized organization. We have not yet seen the mechanisms and the incentive structures and the voting for where we're not heavily focused on, a community building organization that, those are the incentives where you're wanting to align a tremendous amount of unknown bodies who don't necessarily have to interact to come together in a community that drives something like an exchange environment or, these things that you scale rapidly. Our business model being heavily regulated, dealing with institutional clients, with heavy due diligence processes and things like that. Right now, the world that we're trying to address, those institutional players, they can't really interact with something like a DAO practically yet. It's interesting, and we've thought about this, but this is the type of thing that these type of experiments and dealing with, our portfolio companies that are our clients and seeing what they need to actually get it done makes it impractical at the moment, but not philosophically, only at the practicality level. And that's what we're seeing. And I'm thank God that there are these companies and these projects that are actually doing this and doing it earnestly, really having big corporate decisions, and with billions of dollars sometimes on the line, really community driven, and being so philosophically aligned with that. We've taken the view, just the regulatory and the risk and fiduciary of other people's money, that it's impossible for us to do that right now. But we do have our labs division, which is working on things like that. You're very familiar with JD and the team over there, where we're investigating those type of things in a fundamental way. That brings me now to another question, and I love that question. When you think about regulatory and institutions, and we all agree that following the law and a rule of law and equally applied is very important. What do you think about the regulatory environment for your clients and how they look at digital assets? Where do you think we are in that regard?
Well, if I may, Rain, actually,
please.
This relates actually to your earlier question about the intersection of ESG and digital assets. And I think that it's helpful to think of both as being a part of separate big bang explosions in the past several years, where there's a lot of energy and a lot of matter put out there. And these are two separate bangs. We have a big bang around ESG, and we have a big bang around digital assets. And after the big bang, over time, after a lot of trial and error and a lot of energy expended, you start to see some galaxies form, and people start to make sense of these universes as they mature and evolve. And I think that on the ESG side, as more demand for ESG aligned funds comes on board, you see now government regulators stepping in to ensure that if you are marketing yourself as a sustainable investment, as a ESG investment, that you actually live up to some kind of standards, and can't just be self-reported that you are sustainable. Kind of like in the 80s and 90s, the nutrition labels of saying that this is a light food or a healthy food or organic food. There became some government regulation to actually say that if you are defining yourself as sustainable, as ESG, that it says that you deliver what it says on the can that you plan to. And the same way with digital assets, I think that there's been an explosion of energy and interest and a lot of experimentation. And I think that you're starting to see certain governments look at them and try to figure out, are these an asset class? Is this a new technology? Is this just a new tool? And I think ultimately a lot of the digital assets are neutral tools. And what what impact they have depends on how people use tools. And so, a hammer can be a tool in one instance and a weapon in another. And I think the same thing happens with digital assets. And so I think that we're seeing a number of our clients who are institutional clients are looking at this very seriously and want to operate in a regulated framework because they have to. And they don't want to get too far ahead of the regulations on this. But I still think that you see a number of actors who are trying to move fast and break things, if you will, and try to kind of push the regulations to help catch up with the reality of where things are and where things are going. And I think that there's just a lot of as the dust cools after these big bangs, you see both ESG and digital assets going from niche to mainstream. And once you go to the mainstream, once you bring in institutional actors, I think that there needs to be healthy, smart regulations that don't that don't overcorrect.
It's a very fine line, and I really, as a science dork, I enjoy our Big Bang metaphor and cooling gases and coalescing. I really enjoy that type of view, and I think you're completely correct. When you think about I like that idea on ESG, the regulation that's firming up there. How do you think it's going with regulatory bodies? You guys are a very regulated space, incredibly regulated, as is Arca. How do you think the regulatory bodies are doing with this very difficult, and I can say this is an incredibly difficult, this is an explosion, like you used, Big Bang, Cambrian explosion, a massive explosion in innovation, differences. This is a space that does not change that much generally. Financial services. I went through an ETF revolution, which took 10 years basically to just get when we look back at it, a pretty minor type of change in a structure of a product. I was very close to that, and the amount of time that took for regulators and people to understand it. This is maybe orders of magnitude more complex and more diverse. How do you think the regulatory, can they even do it? Are we doing well? Where do you think we are in what's going on regulation-wise for this space? Either can answer.
Simon, I'll let you take the first crack.
Yeah, look, I think how are we doing collectively? Look, I think as you point out, right, these this technology is still very, very new, and wrapping your arms around it, however you are coming into it, takes a little time and a little understanding. I think the regulators are, the landscape is getting clearer. I still think there's a lot of work to do. What I would say from a TP ICAP perspective is we absolutely welcome the regulation. We are positioning ourselves as we do in other asset classes to be whiter than white, which is why we have a slightly different approach. We move quite cautiously. We take quite a steady and measured move into this asset class, and whilst that means we sacrifice probably some short-term opportunities, I think in the longer term we're going to be very, very well positioned. And when our traditional clients move in that don't have any margin for error when it comes to regulation and the people they deal with and the platforms they engage with, that's going to put us in a really solid position. I think the regulators are doing okay against what is a very, very difficult backdrop, because we know with any new technology does come bad actors. That is a reality, and the focus has to be on trying to make sure that investors are protected, but there also has to be a recognition that laws, let's say in the US, that are 90 years old, with politicians and senators that are maybe 60 and 70 years old trying to enforce a technology that's only 10 years old, means there's probably some challenging questions that need to be asked around, do we need a completely new framework to manage this, because the technology is transformational and it is going to change how we live our lives. And you'd hope, having seen what happened with Web 2.0 and all of the things, the externalities, both positive and negative and second order effects that we're seeing, let's say, from social networks, and the potential damage that they have done in some respects, how they are regulated or the lack of regulation around them, hopefully gives the powers that be and the regulators an opportunity to not make the same mistakes. But I think it's very challenging, and I think it's going to take time for that to really be crystallized. But fundamentally, it's very clear now that regulation is going to continue to drive this marketplace. And again, it's something we're really excited about, because that's exactly how we're positioning digital assets within TP ICAP, and it's exactly where TP ICAP sits across all of the areas that we are focused on and engaged with.
Yeah, I couldn't agree more. We view it similarly here at Arca. We are not the move fast and break things crowd. Not that you don't need them, and this is what makes a great and exciting ecosystem, that you have, various players with different time frames, value propositions, and all of that. Our clients, like your clients, have a zero tolerance for, a regulatory infraction or being on the other side of the law or anything that jeopardizes fiduciary capital, real or imagined. And they cannot access this unless they have partners like yourselves that are giving them the confidence that they're approaching this space with that level of rigor. And like you said, you may sacrifice some engagement with short-term things right now, but the calculus being that there's a tremendous amount of potential participants that cannot access this space as it is right now, and that would like to partake of the benefits of, whatever, all the things that blockchain, instant transferability, 24/7, infinitely divisible, all the things that make the technology so exciting. But really, without regulatory clarity and legal clarity, they cannot avail themselves of it, and then their clients and then their fiduciaries cannot participate. So it really does take all sorts of participants with different type of time frames and views, to make this ecosystem work. And I commend you guys on taking your approach and making it safe for those participants. I think, go ahead, please.
I was just going to say, I think the bottom line when it comes to regulation is the horse has left the barn, the train has left the station, the genie has left the bottle, the bell has been rung, whatever kind of tortured metaphor you want to say. So digital assets are here, and I think I think you've hit it. It's like I think it's for the regulators. I think they're in a tough spot, to be clear, to make sure that the regulations are fit for purpose, and that they bring rigor to this market, that they bring, if you will, a sense of, harmony, harmonizing this ecosystem without stifling the innovation and the experimentation that is going to be required to see, in what direction does this slice of the market take off.
Couldn't agree more. Gentlemen, we are coming up against our time, but I think these were really great places to end this end point of regulation and adoption. Is there anything that you'd like to leave a final thought on, just ESG, TP ICAP's outlook, or anything that you'd like to leave with the final thought before we big bang ourselves or ring the bell of this of our fireside chat?
Brian, I think I'll leave it to you to summarize this, given that you are head of ESG at TP ICAP. I think you're the fitting person to finish this off.
Well, I would just say that we at TP ICAP are really excited about the growth in ESG, and we're really excited about the growth in digital assets. And we, again, aim to be that broker for the transition, both helping our clients navigate the new era of sustainable finance and ESG investing, and helping our clients navigate the new world of digital assets. And as both of these trends are going from, as I said before, niche to mainstream, we're there to help them make sense and navigate this new terrain, these new waters. to bring in some new metaphors at the end here.
Thank you. We needed it. Brian, Simon, thank you so much for joining us. This is exactly the type of conversation about, difficult topics that don't necessarily have right or wrong answers, that I'm really glad to see you and your clients and the people that are trying to access this space are engaging in, and we'd like to encourage. So thank you for joining us, and congratulations on being pioneers in this exciting space.
Thanks so much for having us, Rain. Good to speak with you today.
Yeah, absolute pleasure, Rain. Look forward to doing it again.
Fantastic. Bye, guys.
All right. Thanks.